everyone. This is Peter Wolf. I'm a Senior Vice President with Serrala. We appreciate you participating today in the User Summit. I will be presenting with my colleague, Jatin Thacker. Jatin, if you could just introduce yourself.
Sure. Welcome, everyone. My name is Jatin Thacker. I'm a Senior Manager based out of San Antonio, Texas, specializing in Treasury transformation projects. I've been doing this for almost 15 years now. And today we're going to cover what are the benefits of in-house bank, in-house cash. We will talk about what are the critical things that we need to consider, especially designing in-house bank solution. At the same time, we will try to cover scenarios talking about intercompany netting. We'll talk about POBO, COBO, ROBO, and any questions you may have, we can cover those during our sessions, which is Ask the Experts, which is going to be happening at a later point.
Great. So again, my name is Peter Wolf. I'm a Senior Vice President. I am focused and have been focused for the last 20 plus years in the Treasury and banking space, like Jatin, SAP Treasury, in-house banking, cash management, debt investment derivatives are the areas that we specialize in. And we're excited about today's topic, taking advantage of the in-house banking in the SAP system. With today's environment, with the uncertainty and economic risks that exist, companies are confronted daily with threats of liquidity issues, customer defaults, disrupted supply chains, fraud, internal and external fraud risk, challenges with controls as far as managing their business and their processes with people working remotely, whereas previously that they were concentrated into offices. And all of these challenges certainly present tremendous risks to organizations that they need to address to accommodate the new normal. And we are excited to present this and other sessions to help identify and help our clients to discover how they can leverage SAP technology, SAP solutions, add-on solutions from Serrala, and integrating those with processes to enhance controls, oversight, visibility, efficiency, effectiveness of processing across their entire universe of payments, inbound, outbound payments, treasury management, cash management, processes and functional areas. So with today's topic, we are going to focus on in-house banking. The session is only 30 minutes, so it's tight. We're going to try and cover and get right into some good material. As Jatin had noted, we have a cash management discussion after this one a little bit later today. We have, as you'll see, a bunch of other webinars that we've delivered, upcoming webinars as well that we'll talk about to give you some more access to some more information that goes into even greater detail. So let's get started. So today, when we talk about the concept of in-house banking, we really need to ensure that there's a common understanding of the terminology, in-house banking versus in-house cash. So we use those terms when we're talking about SAP really interchangeably, but in fact, in the broader sense, when you're not talking specifically about SAP, those concepts do have a differentiation that's important to understand. So an in-house bank itself, it really, when you talk about it as an industry terminology, in-house bank is a generic terminology used for talking about a virtual in-house bank, a virtual corporate bank where one legal entity serves as the pseudo bank for other legal entities in the group. So they provide services that a traditional bank would serve or provide to those entities, and they do that in-house. And so that's a generic terminology, that the in-house banking where a legal entity within your group serves as this virtual bank, providing services like payments, receipts, cash pooling, intercompany settlements, and we'll get into the details of really what those processes are. But that's the generic terminology. The term in-house cash is SAP specific. That is their marketing terminology for the solution that is their in-house banking solution. So when we are talking about SAP, these the terms of in-house bank and in-house cash are all synonymous, right? So in-house cash means in-house banking, specifically in the SAP environment. And so when we look at SAP's treasury environment, treasury landscape, it's also considered to be under supply chain management because of the breadth of the functionality in SAP. The in-house bank solution covers this wide variety of processes across a number of different functional areas. But the terminology in-house cash is specific to SAP, but we're always talking about broad-based the industry requirements and processes for in-house banking. So when we look at the SAP landscape, we break the functionality in the treasury area under the treasury umbrella. We break that down into 4 major groups: managing global financial risk, optimizing investment and debt strategies, managing cash and liquidity, and optimizing payments and banking management. And so the in-house banking really is combined with this whole external banking, engagement with external banks, processing and facilitating activities and acting as a middleman for the other affiliated companies. And you see a list of processes listed across the bottom there in this lower section where it says POBO, ROBO, cash pooling, intercompany loans, intercompany netting, and FX. Those are the core functions that we are looking at when we talk about in-house banking. And so when we take those processes and we look at them in a broad-based environment such as SAP, we look at the integration that SAP provides across these functional areas. And this is a critical aspect of the value proposition that SAP provides. Now, this slide is a very busy slide. Those of you that have been in some of our previous webinars, we've leveraged this slide across really all of the treasury functional areas to show how they integrate into the solution. So if we look at the top left-hand side, you see a number of images that are identifying external systems and reflecting the fact that SAP has functionality and openings, BOPs, bodies, that allow for connecting external systems into the SAP environment, or remote SAP systems into the SAP environment in which you're managing your in-house cash. You see then in the center, it's really the core functionality, each of those squares representing an aspect of treasury management, with the highlighting focusing on those areas that are most tightly integrated with the in-house banking product, the in-house banking, in-house cash solution. And you see off to the lower left-hand side the integration reflected for the in-house banking solution into the FICO, APAR, HR processes. And then to the right-hand side, integration to the external world and how we process payments, receipts, bank statements, and interact with the outside banks and market data information. So SAP provides a tremendous environment in which all of these are tightly interwoven, tightly integrated into processing for in-house banking. And that is critical because the functionality that we're looking for is managed across a number of different, what would typically be siloed areas that don't often engage with one another. So having these integrated functions in the technology area enables that information to flow freely and effectively, efficiently across these functional areas to facilitate the most optimal execution and the greatest control. So when we look at the core processes that I mentioned earlier, most of these are fairly common topics that people, when they think about the concept of in-house banking, think about as the core functional activities within an in-house bank. You can certainly execute on much broader functions. There are a variety of narrower solutions for specific situations that companies have for their in-house banking processes, where we can increase efficiency and produce and process greater control with greater control. But these are the core processes that we typically consider. And so we look at payments on behalf, often referred to as POBO. That's very common. Most people are familiar with that, where one entity pays on behalf of another. So within the in-house banking environment, we process and centralize those activities. And I'm just going to touch on these very briefly, then we're going to go to really going into depth. So receipts on behalf, receiving on behalf of other entities, so centralized bank account receiving on behalf of other legal entities. Intercompany payments and netting, variety of different terminologies used here for settlement between entities within the same legal framework. So settling of their invoices through cash or cashless, but processing so that they can settle those relationships. Intercompany hedging, FX, where we have a variety of exposures across an organization, and we want to efficiently manage, gain visibility to those exposures, and then manage those exposures across the enterprise. The in-house bank gives us capabilities to do that. Intercompany cash pooling and funding, so structures where entities set up their external banking structure to move their funds around effectively. In-house bank supports that and allows for capturing and administration of those relationships. And then finally, intercompany cash flow loans. So after all these transactions take place, balances are left into those relationships, and they're managed as intercompany loans in an effective manner where we can charge interest, arm's length interest, we can apply fees, withholding taxes, etc. So that's a brief overview of the core functionality. So what is the problem that we're trying to solve? What is the problem that an in-house bank solves? Well, this picture is certainly very chaotic and a bit confusing to look at. Fundamentally, what you see there, or what we're showing there, is a number of legal entities in an affiliated group having bank accounts around the world, scattered both across continents and countries, using different currencies, different bank relationships, processing internal and external settlements with outside vendors and customers, intercompany settlements. But this is a reflection of what we see, increasing complexity in the marketplace, where companies are dynamic, multinational. They have broad, widespread relationships with banks. Often those are not well strategized, poorly strategized relationships or structures with those banking, but you have to deal with them. Decentralized processing is very common. And so as you go and look at these more complicated, increasingly complicated structures, both organizationally and legally, we need a way to address that. And this is what the in-house banking solution enables us to do, is to address this in an effective manner. So, John, if you could, I'm going to pull John in here, and he's going to start to talk about some of those solutions, and then we're going to try and supplement that with some discussion about examples, real-world examples of clients that are using it, that we're seeing really as being cutting-edge delivery or use of the solution in the market today.
Thanks, Peter. So as Peter mentioned, in-house bank is pretty much provides similar services to, like, when you compare with commercial banks, right? It offers payment processing, it offers liquidity management, it offers collection functions to various subsidiaries, within the larger corporations. Before we go in this particular slide, let's talk about, there are several key considerations, to be thought through properly when we start designing this in-house bank solution or in-house cash solution. The first is technology selection, very critical. We have worked with a lot of customers, helping them together to create a strong business case why SAP offers a lot of value-added services and making them aware, especially when they're trying to compare with, standalone treasury workstations or even banking solution. Because most of your processes, like your materials management, your procurement process, your sales and distribution process, your invoicing, whether it's AP, AR, are in SAP. So we'll try to cover those few topics like data synchronization, control point of view, float management point of view, why technology selection, especially why SAP, helps robust your solution very effectively and efficiently. Okay, so now talking about implementing in-house bank, two critical points here, right? First is a tax and a legal team. They should be a part of the conversation starting from stage one. If you're talking designing any processes, irrespective of any functions within in-house banks, it's very critical to, partner with your legal and tax experts, because a lot of tax implication, right? There could be local taxes, withholding taxes, VAT on your interest, income or revenue or capitalization, right? Like other examples are transfer pricing, withholding on taxes on a bank interest. Some countries you're required to do that. Are all countries which are participating. There would be some countries, especially in Latin America, Asia, which are regulated more strictly compared to your sophisticated model in US or Europe. So you need to go through the checklist whether all the company codes can participate in the payment on behalf of, whether they could participate in netting, and also how would be the treatment between cross-border. As Peter mentioned, a lot of activities, payment on behalf of for subsidiaries would be happening through this process. So we need to closely think about the documentation, making sure the documentation are placed between subsidiaries and the header. It's a very critical portion. And lastly is the location, right? Again, having your tax and legal team very critical, because withholding taxes, your statutory or local taxes, when you decide how many banking areas or treasury centers are required, those analysis needs to be done in parallel before you talk about technology. Okay. Now let's talk about the design point of view. What are the structures, right? From an in-house bank structure point of view, moving to internal transaction basis, right, and using payment on behalf of or collection on behalf of bank accounts can be rationalized, right? So two critical points here. The first, your internal payments are settled without need for any physical cash, right? There would be exceptions, such as dividend, payments when you're trying to move from one legal entity, especially from U.S. and non-U.S. legal entity. There are a few restrictions where you cannot net your payables with your receivables and so on, right? So you need to have a process where you have, in-house banking, complete in-house banking and partial in-house banking to make sure you have end-to-end committed process going forward. And only manage cash, only need to manage cash to make sure you're consolidating, the needs of in-house banking, right? Now let's talk about the account structure. We're going to talk about the external accounts versus internal accounts. If you are not using payment on behalf of, looking at the customers that we have in today's sessions, looks at the customers which are not using SAP in-house bank structure, you might have each subsidiaries carrying over, or they have their own foreign currency bank accounts, right? So with this model, it's pretty much your in-house bank will have all your foreign currency bank accounts, all your bank accounts where you need to make payments, you need to have amounts coming, through lockbox or any other mechanism. All those accounts will be rationalized and will be held by in-house bank. And we'll talk about the exceptions as well in the next few slides. What will happen with the subsidiaries? Like same as your external model, you have your external accounts with them. Instead of external accounts, you will create your internal accounts. That's the common terminology we might be using when we talk from an in-house cash SAP point of view. So subsidiaries will hold your internal accounts with your header accounts, which is going to be your treasury center, your netting center, or your headquarters. And pretty much the same services. Your subsidiary could have your net balances, which could be in positive. You could have your overdraft balance with your header account. And similar, you could earn interest, if you have a positive balance, or you owe interest to the header account, to the in-house cash center, if you have a negative balance. Right, so those are the critical things you need to consider. And if you see in this sample, not one solution, not one design fits all customers, right? Okay, I'm sorry, I'm going to go back here. In this slide, you see we have netting center, one in US, and then we have multiple netting centers, in Europe, and then one in Asia. This is not, it could be a common design, but it doesn't fit all the customers, right? That's where the legal and tax teams are very critical, determining where you want to have your more optimized cash pooling structure when you want to have this setups done, right? We have seen some customers where within Asia, they have one banking area for China, because to have a simplified documentation, to have a simplified cross-border transactions. They could internally trade within one net banking area, and whenever there's cross-border requirements, they could use the header to move the funds as and when required. Peter, I'm pretty sure you have seen multiple different designs. Can you share your insights on?
This is an area where fundamentally you have to come up with a design that's appropriate for your requirements, your needs. And this is where we can help clients to look at and understand how many of these bank centers, in-house banking centers. Again, there's a driver here that's a tax and legal driver determining how you can most effectively from a tax avoidance or tax minimization perspective set these structures up. But there are other aspects from a management within SAP, effectiveness and efficiency. And so it's very common to see a in-house banking area in the United States and a separate one for potentially rest of world. That basic model, separating U.S. from the rest of the world, is important because it is one of the most critical for increasing the processing efficiencies, minimizing the actual physical cash settlements that are necessary. But we've had everything from a single bank area satisfying the whole world, which is possible, to up to 13 bank areas. I think we had one client that had 13 bank areas. So it's very specific to each client. I think the basic foundational model of a bank area in the U.S. and a bank area outside of the U.S., often centered in Europe somewhere, but satisfying and serving the affiliates around the world, that's probably the most common model. But again, each client is unique in their requirements there. So let's go on to the next slide, just being conscious of time here. It's quick. Sure. 30 minutes goes by very quick.
Right. Thanks, Peter. So this slide talks about the intercompany settlement. Most customers are using in-house bank solution pretty much have this one because a lot of advantages, right? What we're talking about is a key function. The in-house cash is basically streamlining settlements of your invoices between internal entities, right? In most large enterprise, affiliates generally invoice, for your activities, for your goods and services through normal course of business. So the volume is huge, right? The bilateral relationship between your multiple intercompany relationship and the volume is just immense, right? So it creates a lot of challenging, especially for the big corporations, to do a consolidation by trading partner, and rightly doing the reconciliation. That's again very challenging, right? So with the optimal structure in-house bank solution, it technically completes a multilateral, right? You can have your multilateral currency, intercompany settlements via straight-through processing, very critical, right? Straight-through processing from end to end. It finalizes an intercompany transaction using the book settlement, right? So you could streamline, you can aggregate. At the same time, you don't need to do cash settlements wherever the legal requirements, as Peter was talking about, allows you to capitalize your balances as well as the interest. So a lot of benefits using this. So companies can leverage matching and clearing of the invoices, the reconciliation, the consolidation. At the same time, right, we need to be conscious that a lot of legal countries in Asia, in Latin America, where they cannot participate in in-house banking, few situations they can participate but not fully, right? They can separately participate on your payables, receivables. You cannot net together. So you need to have your process designed in such a way it's giving you the flexibility to have those solutions built in where you need to do a physical cash settlement, you have that option. So, even though not every company codes, but at least they could still achieve and benefit, right? Aggregating all your AP and AR invoices, still get a lot of benefits to straight through, automation and reconciliation. And at the same time, as we spoke in the previous slide, when you're trying to do the comparison between SAP versus other systems, right? What are the critical stuff that we need to focus, when doing that comparison? The first point is the float management, right? Very critical, especially if you're moving funds, within different countries, different, environments, especially with the SAP, customer can consolidate those cross-entity payments, right? It can reduce your impact of your float by using the standard integration, very robust integration, which Peter was talking about, because it already have architecture built in such a way. If you have the process in SAP, you're using those tight integration, and your intercompany balance management, and just-in-time funding. You can save a lot of float management when you do your cross-border. When you compare the same functionality with your TMS, you could achieve the same thing. We're not saying you could not, but you have to pay additional. When I say in terms of you have to maintain the interface, right? You have to make sure you have right controls on a data synchronization because you have data in SAP, you're pushing those data. So you have to build the custom reports, controls. Your processes are not streamlined, right? So you have to go through additional stuff if you are choosing the, non-SAP, like TMS or banking. And, I'm not sure, probably we're running out of time here, but there are other critical factors like, your scalability. If you're adding new customers or you're adding new company codes, if you are talking about bank agnostic processing, especially if we have seen many customers, we had, intercompany netting solution provided by bank, but you're too much dependent on your bank. At the same time, you cannot leverage your book settlements. Every time that you do it, you have to pay or do a physical cash settlement. So if you have any specific questions, need any help, please use the opportunity that we have at later time. Ask the experts. We can guide you, help you, any questions you may have.
We have a session later on today for Ask the Experts, so you can actually live interact with us, and we can discuss any of these topics in more detail. We are really running out of time, so just critically, I think it's important there that there is extreme efficiency to be recognized by settling internally, a massive reduction in external payments, massive reduction in loss of float, greater control, greater visibility over your cash, increased efficiency in settlement straight through end-to-end on the process that allows you to reduce the amount of workload and effort and to settle in a much quicker timeline, a much quicker turnaround. So I think that's a critical aspect that SAP provides, being fully integrated. So John, if you could just quickly touch on this, and let's try and cover as much as we can. We really only have about 3 minutes left.
Sure. So this slide talks about payment on behalf of, collection on behalf of, and the cash pooling, right? So as we have only limited time, a lot of companies which we have worked with, they have rationalized a lot of bank accounts, especially doing payment on behalf of third-party payments, most flexible, where you could start rationalizing, have consistent process. And there's no change in the good things, no change in the procurement process, right? So it's not impacting your AP, it's not impacting your SD, MM processes, right? They could continue with that process. It's just the later engine where your subsidiary, instead of sending payments to your external bank, you're routing those mechanisms to your header, and your header collects it. It has all the information required. And with the advancement of the CGI and SEPA, whether it's for direct debit or for your third-party payments, everything is commingled, which allows companies to take advantage, leverage the in-house banking in such a way you have streamlined payment on behalf of. Similarly with collection on behalf of, right? If you have multiple logboxes, or multiple bank accounts strategized only for your incoming payments, you could technically move it to your header accounts wherever it's possible, other than the payroll and the taxes. We understand there are challenges. You need to have those accounts for disbursements, but pretty much you can rationalize those accounts. And lastly, on the cash pool, right? You need to think about the cash pool, especially when it comes to the system selection, that most of the transactions, where with the sophisticated companies and the countries, the banks are going to support ZBAs, right? And the source for the ZBAs are coming from the bank statements. So you need to have a system where it can seamlessly integrate your external bank statements, integrate with the in-house cash, and it correctly shows the balances, whether it's incoming or outgoing, and rightly, showing the balances where you could have the interest and the withholding tax as and when required.
So with this, I think the important aspect to really communicate is there are tremendous efficiencies to be recognized here. Ability to reduce bank accounts, centralize processes, increase control, thereby reducing risk of fraud and errors, to substantially reduce cost of processing. By centralizing your activity, you can use fewer bank accounts, you can leverage foreign currency processing much more efficiently, and you can manage cross-border payments as local payments, and do this enterprise-wide in a way that allows you to substantially decrease costs. I think if we and there are webinars coming up, and I apologize that that I probably took too long in the beginning, but there are webinars coming up that we have a link to in this site that we'll show you on the end of this. There will be links to this session that are coming up for an IHC panel, a case study at Microsoft. They did a great job, have done cutting-edge stuff for cash management, just-in-time funding around the globe, leveraging in-house bank, in-house SAP, in-house cash as the foundation. They are really cutting-edge. Really some very interesting stuff to look at there. They've been about 20 years on the leading edge of this. And then also some past webinars that we have done that can give you access. Now, additionally, this deck will be available. There's a list here of several of the points that we just talked about, operational benefits and financial benefits of in-house banking that you can achieve. And then here are the links to the other webinars, upcoming and/or registrations, past webinars. So we hope that you will attend there and get some more information. We do have an Ask the Expert session later on today that you can participate in, and we'd be more than happy to talk about any of these topics in more detail or answer any questions that you have. I apologize for running a bit long here, but thank you very much for joining. Thank you, John, for the co-presentation. And I appreciate everyone joining. Hope you have a great day. Hope you at least gained some insight out of this, and we would look forward to talking to you and discussing any of these topics in more detail if you would be interested. Thank you very much.